Access to capital is essential for the full development of micro, small, medium, and large scale businesses. All of these business types, they have need for capital, whether those capitals are debt capital, equity capital, credit capital, or smart capital. Today, I want to spend some time speaking about those capital. And I also want to speak to the issue from the standpoint of the advantage and disadvantages that developed and developing economies has as it relates to access to a mixed capital market. This program comes to you with a kind compliments of Global Capital Inc. and the 10X Blueprint Academy. For years, we have been interfacing with businesses across the world. And 10 years ago, the reality we see in developing economies, 10 years later, those realities in terms of access to capital still exist. Now, what we have done at Global Capital Inc. and the 10X Blueprint Academy is to design very unique business models to really help young entrepreneurs or to help micro, small, medium, and large scale businesses to really take a deeper look at the capital market mix. Today, we will briefly look at those issues. Now, just before I get started, do permit me to introduce myself. My name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm a self-published best-selling author for several books, including Billionaire Codes and Manager's Toolkit. My new book titled 10X Branding and Marketing, the Psychology of Doing Business is going to be out soon. Now, today I want to talk about the importance of a mixed capital market. And I want us to look at the mixed capital market from the developed world and developing economy and the issue of competitive advantage. What stands out to us immediately is that the developed world, they have access to debt capital, equity capital, credit capital, and smart capital. Developing economy do not have access to this market and mix, but yet businesses from developed economy, they have to compete in a global landscape of business. Now let's go just a little deeper into this because the disadvantage is mounting up against developing economies and businesses. Hence the need, the urgent need for a mixed capital market. Now, let's look at some of the realities surrounding these markets. When one goes to the DCM, the debt capital market, to access debt to put back into business, a number of pre-qualification criteria has to be met. For example, you have to front your balance sheet, meaning that if you're borrowing $100 million and they're asking for 10% equity, you need to at least demonstrate that you, in your balance sheet, you have $10 million, the equivalent of the 1% equity to get skin in the game before you're even given any form of consideration. So that's pre-qualification one. You also need to demonstrate that you have cash flow, either daily, weekly, or monthly cash flow. This relates to big businesses. What about business startup that has no balance sheet and has zero cash flow? They are at a massive disadvantage. But let's look a little deeper at the pre-qualification criteria. Part of the pre-qualification criteria is to have a credit score. In other parts of the world, they may call it, you have both credit score and FICO score. What is the difference between the two? Later on, we'll discuss all of that. But your credit score comes into issue when you're going to access credit. And if you're unaware of this or ill aware of this, it can come back to bite you, particularly so if you are leveraging credit and you are leveraging bad credit and you are not monitoring your credit score. The flip side to all of this, not having a credit history can also come back to bite you because you have zero history in terms of credit. That can come back to hurt you in when the financial institutions, when credit institutions are looking at your credit score to predetermine your ability to honor your debt obligation. Along with this, age do matter when you are working with the DCM. Why age matter? Now, the research that we are doing and the facts that we are getting, the persons that we're interfacing with, what we are seeing is that from the time you reach age 45 in developed economies is an issue to start worrying about. Why? Because of your age, the age influences the life cycle of the debt. The life cycle influence the monthly debt obligation. The monthly debt obligation predetermines your ability to honor the debt obligation based on your income. So it has this ripple effect, and if you're unaware of it, you are going to be somewhat challenged to reach the pre-qualification criteria of the DCM and access the debt capital market. So these are important issues that we walk you through when you come into Global Capital Inc. or you come into our learning institution, which we call the 10X Blueprint Academy, to learn all of these systems. Last but not least, you have things like collateral. Some institutions also may ask for a business plan and other historical financial data. But these are some of the basic pre-qualification criteria that you need when you go into the DCM. And with everything that I've just said, a business startup do not have balance sheet. A business startup do not have solid cash flow. A business startup still need to learn so much about credit score. They may have age at their advantage, and also a business startup may not have collateral. So this in itself put them at a major disadvantage. And here is where they are playing in an economy where access to capital is 99% dependent on that capital market. They don't have the marketing mix. Now let's look a little bit at the equity capital market and the advantage or disadvantage that this may have for businesses in developing economy. Now, while in some developing economy, there is no such thing as an equity capital market, just let's examine some of those pre-qualification criteria. Strong equity capital investors, accredited investors who may want to pump monies into your business, they're going to be looking at things like your team dynamics. And how important is this? It's practically impossible for the sole trader to become the accountant, the public relation consultant, the marketing manager, the HR manager, the product innovator, the project manager, the finance specialist. So in most cases, the accredited investor, the venture capitalist or private equity investor, they want to see your team. It's important that you can put together the best team and front the best team to really impress upon the equity capital investor that you are ready to get enough skin in the game, that you're ready to play the game of business. Along with this, they may look at your corporate culture because your corporate culture is everything. Your corporate culture influences your retention rate, it influences absenteeism and staff turnover, depending on how far you go in building up that unique corporate culture. And one of the things any investor is going to be looking for is how your corporate culture influences stability in your workforce, because stability in your workforce is what's going to influence the cash flow and potential of the business. Yes, the experienced venture capitalists, they will look at these things. And how prepare our businesses for this, particularly in developing economy? First of all, they struggle to put a team together. They struggle to build out their corporate culture. It's a reality. Research is showing this. Depending on the size of the businesses, the bigger businesses may have this A grade, but many businesses at this micro, small, perhaps medium-sized level, they struggle to put these things together. Historical financial data. Many of these businesses also you cannot find. If even you find historical financial data, it may not be as impressive as you want it to be to make an investment decision with these small businesses. So you need historical financial data. Along with this, you need to look at things like your market analytics. And what exactly do I mean by the market analytics? There's something that we talk about when we talk about the market analytics. We talk about you knowing your market. It's about you understanding the lifestyle, culture, and social class of your specific target market, your demographic. It's about you understanding the market accommodators and the market enablers, and you being able to build out healthy, productive relationships with that. Can you demonstrate this? Can you front this as a part of your pre-qualification criteria to access equity capital? Again, many companies, we are seeing small companies, are not able to do this. So these are just some of those pre-qualification criteria that businesses in both developed and developing economies may have to look at when trying to access capital. But I said at the beginning that in many developing economies, they do not have a fully developed equity capital market or a developed or equity capital market at all. So businesses wanting to start business leaders who are in business, they're ultimately dependent on the DCM. I say all of this because of the fact that the importance of understanding the the reality and the importance of what a mixed capital market can do for business scale up, business diversification, business integration into regional and international trade cannot be overemphasized. There's a need for a mixed capital market, a mixed financial market, where you have debt capital, equity capital, credit capital, and smart capital. Now let's talk briefly about credit capital. The pre-qualification for credit capital is vastly different from the debt capital and the equity capital market. Now, if you're going for personal credit, the three basic things that stand out. You need to have your SSN number. And every citizen in the developed world, once you are in the database, you have your SSN number. That's how the state, federal government identify with you. So all you need to have that. In developed world, you might have your TIN number, your NIS number, your GRA TIN number. You have some of these systems already in place. So along with your SSN number, they will look at your credit score. And if you understand what you're doing, it's not very hard to have an excellent credit score. Or if you don't have an excellent credit score, you understand the process of trade lining, you can build up that credit score within a short period of time. Along with this, the third element is a fixed place of address. Now, guess what? How difficult it is to have your NIS number. From the time you register in the system, they assign it to you. how difficult it is to build up your credit score, how difficult it is to have a fixed board of address. And this is for personal credit. So those persons who are going after personal credit as a means to do, smart things, I want to believe, they can easily access this. From a business standpoint, you may not have, if even in the absence that you don't have your SSN number because you are a non-immigrant, because you're setting up business, there are still opportunities for you to access this type of capital. There's things that we call the EIN. There's things that we call the ITIN, that you can leverage as your SSN to access credit capital with much greater ease. And the portfolios that exist, and I always talk about portfolios that exist within the credit capital market, is tremendous. It's tremendous. So here is where you have developed economies, businesses having access to these type of credit capital, but not only access to this mixed capital market, but they can access capital in cases at zero APR. You have systems where for 18 months, you have zero APR. And from the time that they start to apply the APR, you still have a low APR. You have like 4.5% APR or 7% APR. 4.5% or 7% APR is still much lower than the APR that you have to pay when you're taking debt from the DCM in developing economies. So again, in developed economies, they have a tremendous competitive advantage against developing economies. It is our belief at Global Capital Inc. and at 10X Blueprint Academy, we have to create a more enabling environment for businesses to grow and strive. We have to establish the big brother system that can really mentor and coach and support smaller businesses to move forward. And perhaps we need to have, tripartite relationships between private sector, government, financial institution. And as we talk about financial institutions, it is about widening the scope of the financial portfolios that currently exist. It is our belief that widening the scope of the financial market does not have to affect the DCM in terms of their cash flowing potential. Yes, it may force them to rethink and retool and rearrange the thinking process. But with new institutions like institution that is going to come on board to help to minimize risk associated with debt, risk associated with equity, risk associated with credit, it should be able to provide these financing institutions with a higher level of confidence that their investment into businesses and their investment into personal human resource development by simply giving them access to capital, it is significantly minimized because of the support institutions that are there to guide the beneficiaries away from bad debt and into creating good debt cash flow. In closing, I want to say this. The American stock exchange market just didn't happen and begin to strive the way it is striving today. The New York Stock Exchange market was officially registered on the 17th of May, 1792. From then to now, it's 200 plus years. Today, we have over 1 billion shares that changes hands on a daily basis. And it's largely because of the trade that takes place in these markets between striving businesses and ambitious individuals who want to achieve more financially that literally sustains these activities within the stock exchange market. A mixed capital market in developing economies, taken from the historical data of how the American stock exchange market grew, you can start to see developing economy begin to mirror these forms of development because it is access to capital by the private sector. It is access to capital by the private citizen that truly support in the economic development and stimulation and leapfrogging process. So this is a subject for discussion. It is a subject that it is long overdue, and I believe that we have gone way past the talking point. This is the time that the right minds should come together and really start to say, with all the development that is taking place in some parts of the world and some economy, to maintain status quo is to leave our citizenry, is to leave our private sector and local content at a massive disadvantage. And this is the time to fix it. My name is Gary Thompson. I trust you would have enjoyed today's program. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the multiple best-selling author, self-published multiple best-selling author for several books, including Billionaire Codes and Manager's Toolkit. My new book titled 10X Branding and Marketing, The Psychology of Doing Business is going to be out very soon. So I want to encourage you to like, subscribe, and share. So you will be the first to get this information on a daily basis or a weekly basis. Be blessed, be smart, and see you in the next broadcast.